Hey everybody, Chad Lubin, Cross Country Mortgage. Hope you're having a fantastic Wednesday. So I'm putting this video out because the Fed just met, the Federal Reserve Board. They just increased the prime rate to 0.75%, so 75 basis points higher. This is a move to combat inflation. Don't let the media misinform you. This is a good thing long-term for our economy. They're going to paint it as bad. I have proof that this is a good thing. So it's counterintuitive, I know, but the biggest concern in our economy, in our country really right now, is the rapid increase in prices, right? Inflation. Neither market likes the inflation. When I say neither market, I mean the stock market doesn't like inflation, and the bond market, which is where interest rates on mortgages are determined off of. It's called mortgage-backed securities. So investors in these securities and investors in the stock market wanted to know that the Federal Reserve Board was going to do something aggressive to combat this inflation. Their main move is to get aggressive and have a prime rate increase higher than expectation. So the expectation was, and the plan was, a 0.5% increase. They went 0.75%. So if you look right now, these are the markets as of 3:24 Eastern time, 2:24 Central Standard Time. This announcement just came off. You can see a positive. Green is good, red is bad. We want a positive reaction in mortgage-backed securities. That happened, hooray. We want a positive or green in the S&P 500 index. That is the stock market, excellent. We want down in US Treasuries, good. So the market is saying finally the Federal Reserve Board did what they should have done starting at the beginning of the year, and they're finally showing some signs of getting serious about combating inflation. Now there's going to be some short-term pain on this, right? But luckily, as you see, we're seeing red is bad for interest rates, green is good. So we're already seeing a strong rebound from this information. So Friday, we saw one of the largest interest rate increases between Friday and Monday in the last 20 years. And we're starting to see a rebound. Green going back up means lower mortgage rates. So right here, as you can see. So we wanted this. We're glad we got it. The markets are glad so far that we have a Fed that plans to get aggressive, because they have not in the past, and they are way behind the 8 ball. They have handled this very poorly, in my opinion. It's great to see them to take some steps. I thought they should have done a full point, 101%. They didn't, but this is a start in the right direction. So hopefully they do this one more time. Hopefully we see these inflationary reports come down. Hopefully we see energy prices, grocery prices come down. Disposable income is getting used up on all these things, and there's not anything additional to be used. So a lot of families are struggling. This is a good sign for the future. This is a great sign for short-term mortgage rates. We're seeing a good rebound today. So please call me if there's any questions on this, how it impacts your loan, how it impacts your finances. I'm here to answer any of those questions. 312-731-4939.